Good afternoon. This is Ken at Tortoise Capital with the review of the weekend trading report, Merry Christmas edition for December 21st, 2019. Bullish normal conditions, overbought on most of the look back periods, holding steady on the 3-day look back. Green bullish, very strong price relative to the 200-day moving average. Strong ADX upward trending. We just tipped into risk on with a reading of 1.002. That puts us right at the break-even point here on the risk Z histogram. You can see that we dipped as low as the -1 sigma. When that reversed up, that 8 days ago, that gave us a signal for possibilities on the long side swing, which is exactly what happened. Once more, you can see the holdings for this month: tech and finance heavy, and the large caps, and then the leaders going into the turn based on Friday's price action. Emerging markets starting to add to the mix. ETF2 theoretical exposures at 100%. You can see the links to all of our production sites. Really want to emphasize this TC2000 bundle, the KL bundle, KL-bundle.com. The guys that are using it are loving it. Danny is showing every week how to routinely harvest opportunities from that platform. I really think that long term that has tremendous potential for you. Looking at the market health check, this is on a monthly basis. The 1 month and 2 month lows have been important in the past. I want you to notice, the magnitude of sell-offs when things crack. The size of this sell-off would be a move back to about 265 if we were to have some kind of symmetry. But again, notice if you use the previous month's low and the 2 month low as an indicator, you get protected. Also the north skin of the dragon in this case. So there's plenty of markers here about where you should be setting your stops to protect against disaster. Meanwhile, taking advantage of a market that refuses to lose. It's gone summer, fall, summer, and we're early in the price relative to the monthly Red River. So there's 325 is the previous Z3 excursion and -1, and then 335 is the current Z3 excursion, potential upsides. Weekly market health check, same consideration. The 1 week and 2 week lows are giving us some indicators of support levels. The bottom skin of the dragon, the RL90 fair value and Bollinger Band mean, and the PSAR flop. So all around 302, really strong cluster that preserves all of this 8-week move. Even the sell-off, which then recovered with like a bottoming tail here, notice that didn't even penetrate the dragon. So I feel safe around 308 on the basis of the weekly, and 313-ish to be even more aggressive. And again, we have a summer, fall, and back into the summer. We've just come through the Red River on a weekly though, so this has been an extraordinary move. But again, the upside would be the previous Z3 peak at 324 and then 330 for upside excursions. In the absence of other resistance, that's sort of the natural limit of available discretionary buying power, I would say. Daily health check, you can see Friday, the last 10 days, the last 30 days with the highs and lows. Looking at skin of the dragon. Monday's opening held all week. Upside 321 and 324 are the Z3 excursions on dailies. So that's the bridge that gets you up to 330. And then the downside, you have this cluster here at the Bollinger Band mean, the PSAR, the RL270, Z-1, 30-day low, and so forth. So again, summer, fall, into the summer. We're 5 days into it, still with room to go. Looking at blended monthly rebalancing numbers, the winners this week, some rebounds in emerging markets and real estate. Otherwise, the other winners continue to do pretty well. Technology wasn't bad. Healthcare, power shares, technology again. Emerging markets in the Russell 2000. So that's some speculative areas starting to recover. I consider the real estate sort of to be a rebound, just people buying quality on sale and posturing for potential pullbacks later, getting early positions, I would say. Intel, Johnson & Johnson, Merck, 3M, Home Depot had a nice rebound from oversold. Cisco had a nice rebound. We've been stocking and working those all week. Sector spiders, farms and semis, so that's tech and healthcare. Retail, nice Christmas bounce. Energy, this is just again a rebound from deeply oversold and part of the narrative that energy's bottomed out. Farms and semis. Regional report, all U.S. all the time. Technology, large caps leading the way. XLK, QQQ. That's reinforced in the different index sets, and it's really just it's equities. The other alternates are just suffering. Equal weighted NASDAQ, but otherwise semis, bio, no surprises, more of the same. Daily report. No signals on channeling overreaction. You see the min pain. These are the ones that are the like the relative strength leaders. I like that DIA is up in there. 3M. Boeing just cannot get out of their own way. Holy mackerel. Just suffering. And, you know, in opposition to that, Verizon, Merck with a big breakout. And big breakouts here in Microsoft, Visa, as we have been commenting on. Microsoft is that stealth tech. 3M doing really well. In the ETFs, Treasuries, Japan, Asia less Japan, and EFA all testing out on the auto framer pretty well. I just think I think Treasuries, that's just that flight to quality opportunity there. But meanwhile, the big breakouts, UDOW, Tech, Russell Small, Healthcare, and the Russell Mids. So it's all equities all the time right now. Plenty of super pinches to choose from. Walmart, Caterpillar, Intel, IBM. Auto framer showing again some quality opportunities. Boeing, you just have, it's either going to go to zero, which it won't because of the military industrial complex and the buy U.S. movement. So that I'm stocking that one for buying quality on sale. Regression line fractals. The deep value, small caps, treasuries, bonds. Daily squeezes. I like when the indexes are poised to break out. So even though there was some good grinding upward movement, the lack of volatility in the holiday season says there's room for that to continue to pop. It's not parabolic yet. I like looking at the spring. So U.S. Steel has been a tremendous short-term trader for us, as has been Home Depot. And I would expect Chevron to continue to benefit from if the energy sector continues to recover. Industrials and silver here. Let's see if we can, do we have energy in here? Yeah, energy is in the summer. Chevron has some room to catch up. These summer leaders, IBM, Visa, American Express, these are all the ones that's where you find the relative strength leaders right there. Laggards, Boeing and Disney, metals and mining in Japan, and all the big breakouts. This is how good Merck, 3M, Microsoft, Verizon. I mean, if you want to keep it simple, what's really working on every time frame and no resistance overhead? I mean, why wouldn't you? Upward movement. Every pullback is an opportunity to buy. There's one, there's one, there's one. The slope has crossed over its 10 period. It's still close to the long-term average, so there's room for it to grow. a low, a higher low, a higher low. So this is still a move to 320 if it gets back up into here. And it's already holding steady at the previous excursion, so that's ready to go. Especially the more the impeachment looks like a sham impeachment, the better off that equity is going to be. All Trump all the time. Decisively strong, but not anywhere near where it could be. That's pretty good performance once it broke out of that double top. Wow. That's leg 1, middle of leg 2. That's everything we got from the daily report. I hope you have a wonderful holiday season. Stay safe, stay healthy, stay happy, embrace your friends and family, enjoy the spirit, share with others, keep marching, take good care.